Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on bullish versus bearish and what that means. If you're new to the stock market's all about the battle of the bulls versus the bears, right? Bulls believe that a stock is going up. Bears mean or believe that the stock is going down, right? So then that whole tug of war, that whole battle is basically the tug of war and the battle between the bulls and the bears. Now, when that happens, right, it leaves a footprint, it leaves a trail of candlesticks, right? So candlesticks are what you see on the chart right here. You'll see I just have a random chart pulled up of Apple. These green candlesticks that you see are the bulls. They're trying to push the price up. The red candlesticks that you see here are the bears, and they're trying to push the stock down, right? And what happens is in this battle, it leaves footprint, like a digital footprint that you see with these candlesticks. And these candlesticks form very important patterns. And these patterns tell a very important story of support and resistance. So this is where you hear, the whole terms, in the stock market, buy low, sell high, right? Support and resistance. So if you're buying low, you want to buy at support levels, and you want to sell high, which is near resistance levels. So to give you an example, a resistance level you'll see on Apple, here's a peak right up here of this 233 right here. This is a peak level. This is a resistance level right here. So this is where you'd want to start to sell because it's starting to get overextended over at a peak resistance level. So this is where, again, resistance. Support levels would be like near these moving average lines down kind of in here, more like right in here. So when a stock kind of goes up, it moves back to these, moving average lines. This is a support level right here, right? So you can use this 9 EMA right here. This is on the daily chart. When a stock moves and rides up here, it's kind of moving in a trend right here. So the bulls are pushing the price up. When the moving average lines you can see start to cross over and price starts heading down, right? The bears are starting to take control. So the bulls were in control over here, and then you start to see the narrative flip and change when the price gets near resistance level, starts pushing it down. And these red candlesticks right here are the bears coming in and pushing price down, right? So this entire battle in the stock market is the battle between the bulls and the bears. So let me show you a chart here of the SPY. This is very important, especially if you're new getting started to the stock market. A lot of people will be like, oh, what's the stock market doing today? What do you think the stock market's going to do, right? Because again, most people are, that are just getting started, they're new and they hear their information on a news source, CNBC, Bloomberg, Kramer, and they're just hearing them talking about certain stocks or, hey, the stock market had a great day today, right? Or the stock market had a bad day. You have to be able to look at the charts and see what does that mean exactly, right? And it takes time. We tell people it takes a lot of time. Many traders, 6 months, a year plus to get comfortable. So that's where on our website, we do have lots of resources to help you in our courses to teach you these things. So if you're new to trading and you're like, I don't understand what this means and what this whole chart looks like, it takes time, right? Very simply. But when you look over here, when you start to be able to learn how to read a chart, you're going to see, like, let's say when, someone, says, hey, the stock market had a great day today, right? And you're looking down here. Well, that's great. It had a great day down here, but it's also been really down, right? So a great day when the market's been down, it's good where it's holding, let's say, a support level, but it doesn't mean it's great in the overall scheme of things, where you might not hear back in this level, oh, the stock market's doing great, but it is, up here, it was just riding this trend line moving up, right? So these bigger days might get attention, oh, great day in the stock market here, but it's holding support. Doesn't mean it's great overall, like up in here, right? So it's very important to be able to understand all of these candlesticks and what they do, and then find a bigger picture overall in what's happening. And you can see, like, when a stock goes up right to this level here, you see the bulls are pushing it up, right? So it's riding these moving average lines, and then the bears took over up here and started pushing it down. So when you see price moving and riding these trend lines, the bulls are in control. When they start to fail and start falling down, the bears start taking over. So again, moving average lines, again, we teach you this stuff in our courses. They're lagging indicators. Candlesticks are definitely more important, but they're a nice gauge when you see, again, price moving along. The bulls are in control up here, but then you see them starting to cross over and candlesticks start falling below. The bears are in control, and then you can see it's starting to be a mess, right? So you can see these candlesticks failing these moving average lines. The bears are in control, whereas over here, the bulls are kind of riding it and moving it up over there, right? So that's why it's so important, you know, especially if you're new. Don't go investing money into the stock market until you know this stuff, right? Until you know support and resistance, patterns, candlesticks, and being able to put it all together. And so again, this video is just about the bulls and the bears. And it's, again, bulls believe, or they're pushing the stock up. Bears believe that it's going down, or they're trying to push it down. And it's that constant battle between, again, the bulls and the bears in the stock market.